Well, what's up, guys? Welcome back to the channel 10 Baggers. Just doing a little research on Webull here. So I decided I'd make a video about one stock that I was investing in this week, a stock that I'm very bullish on. That's Fubo TV, ticker FUBO. If you're interested to know why I think Fubo could be a potential 10 bagger down the road, drop a like and stick around for the video. Alright, let's get to it. Okay, so let's do a little background on the company. Fubo is a connected TV streaming service. It's a product that could replace traditional cable in a way similar to Amazon Prime or Netflix. The only difference is that Fubo has access to live TV from many of our most famous content producers. One thing that differentiates Fubo from alternatives is how they have positioned themselves to be a leader in streaming one particular type of content, which is sports. As a big soccer fan myself, I got Fubo's service and I can watch tons of games from around the whole world. Fubo recently announced the acquisition of a sports betting company called Victory and announced that they will be incorporating a sportsbook into their platform by the end of 2021. With the performance of other sports betting stocks in the market, such as Penn and DraftKings, due to the success of the businesses in the pandemic, but also as well as potential legislation which will legalize sports betting in many states. Just bullish for the sports betting industry in general. So it's great that Fubo is getting involved here. The recent move to incorporate a sports book into Fubo makes me think that Fubo is an undervalued gem, both for the connected TV service, which includes sports, and the future revenue that they can get from gambling. Can you just imagine having live spreads appearing on the TV while you watch the game? It would be pretty cool. It'd be very bad for gamblers, but I think it'd be very good for Fubo's bottom line. So let's talk about how the stock itself has performed since it came to market. Fubo started as a SPAC merger and was pumped by Zach Morris and the Atlas trading crew to 60. Not a dig at Zach at all. I think he does amazing things teaching people how to trade and everything like that. But maybe $60 was a little high to go up from around $9 in, a month and a half. But this price action is what got Fubo on my radar initially. I tried not to FOMO into the stock while this was happening, but I watched it closely for a possible entry. The stock was then shorted all the way down to I think as low as 23 and has since recovered to the low 30s. I started my position in Fubo around the high 20s and continued buying over the next week, and it left me with an average of about 33.50. I'm very confident that this is a good entry price for me long term, although of course the stock could go down from here in the short term, but I'm thinking 5-10 years out, I'm pretty confident that this is a great entry point into this stock. Right now, Fubo has a market cap of under $3 billion. In this market environment, that's relatively small for a stock in a quote-unquote hot industry. ARK Fund recently posted research about bad business models, and in their research, they specifically call out traditional cable as a failing business model. Kathy Wood and her ARK Fund team have consistently predicted the disruption of old technology and they've picked many winning investments. And I think that even without, ARK Fund research, I think most of us see that traditional cable is going to be completely phased out in the next decade or maybe 2 decades. I mean, it's not worth it. So Fubo is one of the streaming companies that will benefit from this transition from traditional cable. And so if you think about it like that, the runway of the potential market of connected TV, I mean, I think Fubo still came to market relatively early in the early innings of this sort of secular growth story. Fubo certainly has the growth numbers to back up their valuation. This is where the stock is very, very impressive. It's growing revenue at an extremely fast clip. In quarter 2 of 2020, they had a revenue of $44 million, and then just by quarter 4 in 2020, they had $93 million of revenue. outperforming estimates for quarter four by 10 million. Doubling your revenue in half a year is absolutely nothing to scoff at. The cash flow side of the company isn't great, but that's just representative of the company reinvesting their revenue back into growing the business, which is evident with the acquisition of the sportsbook. Fubo is likely to continue growing at rapid rates, as I don't see the amount of people moving towards connected TV slowing down anytime soon. At the end of 2020, the company expected to have 500,000 paid subscribers. They exceeded that by almost 10% and is now sitting pretty at 545,000 subscribers. Considering how difficult it is to find a streaming service that has all your favorite sports games across channels and different sports, and how quickly connected TV will grow in general, I don't see Fubo slowing down anytime soon. Hence why I think after the 50% stock price haircut from the run-up to 60, I do think the 30s offer a great entry point for Fubo long-term. The bearish case for Fubo is that right now they don't actually own or create any content, which gives them no value proposition. I understand the thought process behind this, but I'm not sure why this is a bearish case, as traditional cable companies don't own any content either and are a much more expensive alternative, which comes with packages if you want sports that you don't always want. Fubo's offerings are catered to the subscriber. There's different tiers you can look for, different sports focuses. I think that they're going to do eventually like maybe custom packages where you can choose just certain things and pay for that. Long term, I do see Fubo succeeding in the sports streaming corner of the market, and I just think that the sports book is going to add to their revenue streams brilliantly. Again, the total addressable market for streaming content in sports is just simply massive, and it's so much greater than Fubo's current market cap and revenue indicate. The young company is doing an amazing job at growing that revenue and the amount of subscribers, so they're going to continue to grow with that industry and take up market share for themselves. I mean, it's a massive industry, and so like even if they can get a small portion of that market share, they're going to be maybe a 10x from here. I don't know exactly how when I would consider selling Fubo from here, but the connected TV market is just so big, and Fubo has an opportunity to grab, a certain percentage of that massive industry. So let me ask you a question. Do you know anyone under 30 that pays for cable? I don't think I do personally. Most of my friends just want to watch sports, and then they have, the typical Netflix, Prime, HBO stuff. Fubo gives us direct access to the sports side of things, as well as some live TV. Like you can watch things like news, whatever's on NBC, CBS, that type of stuff. And then maybe they'll eventually be integrated with other content producers and will diversify their offerings away from just sports, or focus on sports. All in all, Fubo is a massive buy for me, simply just on the growth numbers and the subscriber numbers. I just think that the sportsbook will add brilliantly to those revenue numbers, but just the rate that they're growing subscribers is just so bullish for the company long term, especially at this valuation. So, I mean, I'm going to continue to add to my position on any weakness in 2021. If I can get if it goes, 5-10% below my entry, I will be a buyer as much as I can. All right, guys, so that's my video on Fubo. Let me know what you think about this stock. I would love to hear any bullish or bearish opinions from you guys. Don't forget to follow me on Twitter at 10xbaggers to interact about what's going on with the markets. I hope you have a great day and happy bagging, folks.